Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Well guys, we're back here on YouTube and let me start by holding my hands up and saying mea culpa, mea culpa, mea maxima culpa. I throw myself at your mercy, prostrate on the ground, begging forgiveness for the terrible and awful, unforgivable condition of being born a fallible human being. I made an error in the previous video where my short-term count was indeed proven incorrect, and now I shall hang my head in shame and allow all the other Elliottians of the great and mighty internet throw their mirth and disdain upon me as I beg forgiveness. Or we could just accept that a short-term count was invalidated and my long-term count is still very much intact and I'm actually still as bullish as ever. I also said in the last video that I would return with 100 bearish counts to satisfy even the most brutally minded bears that exist out there in the Bitcoin space. Amongst those Elliotticians and technical analysis experts which often frequent the YouTube comment section, but unfortunately, ladies and gentlemen, I must inform you that I can only provide 1/100th of the expected satisfaction, as I will be providing only a single bearish count today. So once again, more terrible disappointments and grievances I'm sure that will be expressed in the comment section below, and if you are one of those individuals, feel free to let rip. I am as always at your mercy. Now, hoping that we have filled the drama meter for the day, the week, the year, maybe even for longer depending on your proclivity towards such behaviour, let's now put that all behind us and press on with the day's work of analysing Bitcoin. Okay, so here we are zoomed out on the month time frame, and we're going to start at the start and treat this like any other YouTube video for Bitcoin. If you're new to the channel, you wouldn't have seen any of this yet, and I always like to give people who might be new to the channel the opportunity to catch up with the long-term view that I'm espousing here and the technical analysis on all time frames. So we're going to start with the market cycle, the 4-year market cycle I've got here, which is low to low. As we can see, each of the market bottoms is on the chart here, and our expected finish line, which is the peak of the next incoming bull market, and the next bottom as expected as well. Now those two dates are, the top will occur on the 1st of October 2025. This is not exact science, I don't know if that's going to be the case, this is simply based on previous behavior. And the next market bottom, which I would give a greater probability of being correct because of the 4-year cycle from market low to market low has been so precise, will be on the 1st of November 2026. Now, I've gotten this figure by simply taking the prior bull markets and expanding them forward in time. We have a 165 day here, well, this is supposed to be 165. At the moment it says 1066. And then this is 1065. So all I've done is taken the length of the two prior bull markets and projected from the previous market low forward. Now this is not an exact science, as I said, this gives us a rough guide of the market peaking in October next year. We then look at the length of the corrections. We've got a 1-year correction here, 365 days in the last bear market, and we had a 365 day bear market in the prior cycle, so they are very common. We had a 426 day in the one prior to that though, so they are all roughly in the ballpark of being the same length. So all I've done is taken the 1065 days to project the length of the next bear market, and the next bear market will be 396 days long, slightly longer, from the peak of the expected bull market in October 25 next year through to the end of the bear market in November 26, the next market low. And we can break these down into the seasons, where we simply refer to each of the bear markets as winter, just as we have the winter here and the winter here and the winter here, and then we have spring, summer and autumn of the cycle going all the way through into the peak. Now I believe we are firmly smack bang in the middle of summer currently, and we still have the vast majority of this bull market to go. We've barely gotten moving, in fact, I'd argue. Now this seems to be ruffling a few feathers the more I talk about it. A lot of people think that we've already topped, a lot of people think we're not going to go much higher. Well, that's fine, you can think what you like, but I insist that you provide evidence for why you believe it. And I'm not saying evidence is proof, I'm simply saying it's evidence, it's a starting point. So why do I believe this? Well, how about we start with price post-halvings, because this is a subject I don't think I've covered here on YouTube for a while. I know if you have seen this before, I apologise for bringing it up again, but like I said, new people arriving all the time. Now, how much of the bull market, from the market low to the market high, what percentage of that entire bull market occurs post-halving? That's an interesting question, because it's been observable in every single cycle in which Bitcoin has existed. So we can see in the first halving event on the 1st of November 2012, all of the price gain from market low of the 1st of November 2011, a year prior, all the way through to the highs of 2013, what percentage of that gain occurred post-halving? Well, I can tell you, 98.96% of the total price move from market low to market high occurred post-halving. In other words, the vast majority of all the gains occurred after the halving. Yeah, this worked out at a 9,517.98% gain. Now, when we move through to the next cycle, the next halving event, which occurred on the 1st of June 2016, what percentage of the entire market gain, the entire price move, occurred post-halving from the lows of 2015 through to the highs of 2017? Well, I can tell you that as well. 97.44% of the entire bull market occurred after the halving. Now, if we move on to the last halving, well, not the most recent one, sorry, the one prior, which is the 1st of May 2020, what percentage of the price gain from the lows of 2018-19 through to the highs of 2021, what percentage of that gain occurred post-halving? Well, I can tell you that as well, ladies and gentlemen, and it is 91.6% of the entire bull market occurred post-halving. So what have we spotted here? That after the halving of the entire move from low to high, 90% plus of it occurs after that date. We've just had our halving back in April. We're still below the price of April. A lag in moving up after the halving is very typical as well. So, in order to believe that we've peaked, in order to believe that we're barely going to go any higher, we have to break this pattern. Now that's fine if you believe that, but please provide evidence, not hearsay or suggestion or opinion, evidence as to why you believe that to be the case. Why do I believe that 90+% of the gains of the entire market are still ahead of us? And I don't mean 90% in price from here. I mean 90% of the entire bull market from the lows of November 22 through to the highs that we're expecting to come next year of October 25. 90% of that will occur from the halving of April. Okay, that's bullish. As bullish as I can possibly get. Now, it has reduced from 98.96%, 97.4 to 91.6. Maybe it'll drop into the 80s. Maybe it'll drop into the 70s. But guess what? That's still an absolutely enormous amount of price gain. Now, please, let me clarify again. I'm not saying price will go up 90% from here. I'm saying it will go up hundreds of percent from here. Okay? But yeah, I'm saying that out of the entire move from low to high, 90, 80, 70% plus of the entire gain will come post-halving. That's what I'm saying. Not a actual percentage increase of the entire movement. Right, so I hope that's bullish enough for you. So there you go. Not sounding particularly bearish yet, am I, with all these bearish counts I was promising. We will get to that later. I'm just going through the basics first. Either way, that's the cycle stuff covered. Right, so we talked about the market cycle, we talked about halvings, we talked about why we are bullish and why we expect this behaviour to continue, and how much time we have for it to continue. We have a fair old time left until we peak. We've got over a year, guys, until we peak. That's plenty of time for that big euphoric gain to come. Now, I don't tend to touch on macros very often, but let's just be absolutely honest and frank with ourselves for a minute. Regardless of your political affiliation or who you believe should or shouldn't win the US election, is completely irrelevant. At the end of the day, CPI figure just came in below the 3 handle for the first time. Go back 18 months and I was calling almost perfectly that CPI would come down from a 9.5%, would return to normal levels, CPI would come down, rates would peak, then rates would start getting cut. We're about to enter a lower inflation, lower interest rate, pro-business period in history. where we are going to see more liquidity available for the markets, right? And if a certain individual who could get elected gets elected, who we know has expressed pro-Bitcoin, pro-crypto sentiment, and historically was very good for the stock market and was very anti-high rates. You know, I'm not going to name the individual just in case I get striked for any reason or people get very cross with me, but we all know what I'm talking about. There's lots of reasons to be super bullish if all of these things play out. Right, so that's another... I don't touch on macros very often. This is a technical analysis channel. I'm just saying, you know, I find it very difficult and very confusing, and I have done in the stock market as well, which I've been calling bullishness, bullishness, bullishness for 2 years, right? And I still come across bears all the time, and it's like, guys, we're moving from bearish to bullish. If there were bearish reasons, they would have played out. But either way, I digress. Let's get back to the video, shall we? So we've looked at the long term, so now let's look at our primary count. Okay, a series of 1-2s, cycle degree, super cycle degree, and primary degree. Now, I've covered this before. Why do I believe these to be a series of extensions within a wave 3? Why do I believe this? When so many people want to say 1, 2, 3, 4, 5. Well, they wanted to say that before, believe me, I've been there. And they wanted to say it the last cycle. And they'll no doubt want to say it this cycle too, because everybody wants to count to a top. It's just human nature to find 5 waves to a peak. Alright? But the way I look at this is all of these corrections are sharp corrections. They share the same corrective form. Now I'm just going to find where I put that. It's over here somewhere, probably deep down in the... Where is it? You know what? Have I deleted it? Corrections... No, that's it. Well, we'll lose that. There we are. Sorry for the delay. Sharp corrections, and they're deep. And they're all zigzags. So they're all sharps. They're all sharp corrections. There's no alternation, as one would expect in a wave 4 to a wave 2. And there's no alternation anywhere. They're all sharp corrections, and they're 86%, 84%, and 77%. They're all severe drawdowns. These are wave 2s. Right? Now, if you don't know much about Elliott wave psychology and Elliott wave behavior, I have videos on my channel. Well, sorry, I have videos on my Patreon, and I'm available on the Discord on the Green Star Education section, which will teach you about Elliott wave psychology and Elliott wave personality, as we call it. And these wave 2s are essentially identifiable by sentiment. The sentiment of the lows is absolute fear, absolute dejection, end of the world, sky is falling, it's dead, it's over. And I'm telling you, having gone through all of these bear markets, that's exactly the sentiment which occurs at the low. Each of these times. That is not the behaviour of a sideways, consolidatory, like time-wasting wave 4. That is the behaviour of a terrifying wave 2 sharp correction and a major bear market. Right? I've been there. I've felt it. I've learned from it. I've watched others experience it. So not only do I believe that the count makes sense, the correction lengths make sense, the correction form makes sense, and the correction depths make sense, the sentiment and psychology expected for these wave 2s at various degrees makes sense as well. And if we are going to continue to see the kind of post-halving gains that we've seen in prior cycles, we need these to be wave 2s, otherwise we're not going to make enough gains as we progress into the wave 3 at multiple wave degrees, if that's what I believe is happening. Now, I know it's uber bullish, and I know a lot of people object to it, but like I said, if you have a counter argument, please feel free to provide the counter argument with your evidence. And if you just say words like left translated cycle at me with no appreciation or explanation of your understanding of it, you will be ignored. Okay? Jesus Christ, coming out all guns blazing today. Sound like someone's pissed in my pint. Now, I'm telling you, I'm actually having a bit of fun, just having a bit of a rant for a change. I don't tend to do this very often on YouTube. Do it too often in my live streams, but either way, could it all be wrong? Of course it could. It could all be completely fucking wrong. Everything I've said here could be completely wrong. Right, and everything you believe and you say could be completely wrong. And we should stop approaching arguments and discussions like, actually, you're wrong here, it's this. No, you're not. No, I'm not. Who the fuck knows who is? Right? All I'm saying is we have to provide evidence for our theory. We have to craft a theory. We have to have evidence to support it. Alright? That's what we do. As Elliottians, that's what we should do as analysts. Now, anyway, I've rambled enough. We've explained what I think is going on over the shorter term. Let's turn off the count now. We will look at the bearish one before we come down to the smaller time frame. Let's just take a look at the chart. Come down to the weekly time frame. What do we notice about the week of the low, where Bitcoin achieved greed and fear, or fear levels of extreme readings, extreme fear? We got a big old dragonfly candle. You could call it a doji, but the high at the top is significantly shorter wick than the lower wick. It's extremely bullish, long wick to the downside. It finished green for the week with a very strong push from volume. We can see here the strongest push from volume we've seen during the entire consolidation since the peak of the correction began. Okay, that looks like a low. From a candle point of view, from a volume point of view, that looks like a low. I'm not guaranteeing it is. We could go low. We've got counts for that. But I'm just saying, when fear reaches fever pitch, and Tom's count is proven wrong, and everyone goes, "Oh my God, it's wrong. We're now going to hell." Just so happens that that is the exact perfect sentiment to find the market low, and I think we may well have done. Okay, but I could be wrong. So I'm just pointing that out first. Now on the weekly time frame, we've pulled back to the 60 exponential weekly moving average. This is synonymous with finding a larger wave degree correction completion. We can see the wick through it. We've done it here as well during the first move back from the April highs into the lows of September 23. Okay, and we've seen it in prior bull markets as well. We've had a severe one back in the which was COVID, which I do think was a bit of an outlier, but it still does prove that we had a significant pullback through the 60 weekly moving average all the way through the 250 weekly moving average in that first wave 2 back there. And we've done it when coming off of the lows in prior bull markets as well. And you know, I won't be surprised. Here's another example here coming back through the 60 weekly average. So it's not abnormal at larger wave degree to breach these moving averages on the weekly time frame. It's never going to always look the same, but it's perfectly normal behavior. The daily time frame, that brings us through the 250 exponential moving average, which we did also back here in September, which we also did back in March of 23, and we also did we did recently here in August. So what do we notice about price action post these particular lows that we're talking about? Well, let's find them on the chart, shall we? So we just spoke about some of them. Here's one big bullish hammer, big long wick to the downside. Okay, can we see another clearly? We don't want to just grab anything which looks like a low. Let's be specific. Here's another example, long bullish wick to the downside, another bullish hammer. And here's our most recent one. Right, what did price do after putting in these lows? Okay, we can see how this one also had a significant increase in volume. Right, price went up afterwards. Putting in this bullish candlestick, price went up. Bullish candlestick, price go up. Not a guarantee, but it would be perfectly normal for it to occur. Okay. Now, I think I've rambled enough, honestly, about classical analysis. We want to talk about the Elliott wave counts, don't we? So we'll start on the longer term time frame first. Okay, so let's zoom in on the bullish count first. We have two counts here in this very simplified manner. We will come into greater detail later. 1, 2, 1, 2. That's the yellow count. Intermediate degree, minor degree. Now we're transitioning to a wave 3 at intermediate degree within primary 3, within cycle, within super cycle, so on and so forth. Or it's 1, 2, 3, 4. That's the orange count, and we're about to enter a fifth intermediate wave. That fifth intermediate wave will complete primary wave 3. Primary wave 3 has to go sufficiently beyond the end of primary wave 1 back here of the highs of 2021 so that the primary wave 4, when it corrects, does not come back in to the price territory of primary wave 1. In other words, it would have to be an exceptionally big wave 5. Not that abnormal for crypto, but it would have to be extremely explosive. But we've got a year left, right, if things play out as expected. If things do play out as expected, we've got over a year left. I prefer the idea of a wave 3 progressing at minor degree into intermediate 3, 4 and 5 to continue over the coming 12 months. That's my expectation. That the next market cycle top will be the primary wave 3 high. That's what I'm expecting. I'm not certain of it, but that's what I'm expecting. So we have evidence that we may put a low in. We have a count to explain it on the shorter time frame. So let's now talk about the bearish count on the long term, right? I promised I would give you one. I only see one. Okay, because it has to fit the long term count in a way which explains the prior high being in place, or the current high being in place. Okay, they're the only options. So we've got such a long way to go, before we have to consider other bearish options, that we might as well go with what I believe to be the most probable. Now, I don't believe it is more probable than the bullish case. I believe the bullish case is the probable case, but this is the way I look at the bearish case. If we're going to count 5 waves and we're going to ignore the corrective depth, the severity, the sentiment, and the form, then we can just count sharps for days until we get into 5 waves high, and we can say it was a high of November, 1st of November 2021, or whenever the hell it was, like 8th of November. 1, 2, 3, 4, 5 waves into a high, and this is the first cycle wave correction we're in currently. Having come back above the prior high, we are now tied into a flat pattern of an A, a B, and then a C of 5 waves down. And this will have to unravel as 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 3, 4, 3, 4, 3, 4, 3, 4, 5. As we go through 5 degrees, as we go through 5 waves at intermediate, minor, minute, minuet, subminuet, micro, so on and so forth, all the way down into primary C of cycle 2. A total collapse, an utter collapse in price. Is there evidence to suggest that if this were to happen, why would we stop here, Tom? Well, being as we're now in the flat and we've peaked in the mind of the bears, and if they are correct, then we can project targets off of the A from the B to find the C. So let's bring up those fib targets, which are here on the chart somewhere. Bear with me. I've got so much stuff on here, it's sometimes difficult to keep track of all of it. It's not that one. Target fibs, here we go. So what have we got down here? Well, we've got the 89% retracement from the market high, 90% retracement at 89. It's a fib number I use, the 89, and that's a linear measurement, and that puts us bang at 10,337. If we take the A wave projected from the B wave, we get logarithmic targets of between 16,784 all the way down to 6,729, hence the big target box. Far more likely that we will clear the wave A low somewhere between 11,839 and 6,729, which is the 123.6 extension of the A from the B, or the 1618 extension of the A from the B to find the C. That's the behavior of a flat pattern. Okay, that gives us a pretty freaking big target box, I know, but what you're going to do. Down here we have a whole bunch of major supports, okay, which could catch the price anytime into that low. We also have the golden ratio in log right here at 10,277, spot 82, right in this, right overlapping the 89% fib retracement at linear. We also have the golden zone 65, 61.8 and 65 there, sorry I should say. We've also got a major monthly level down here at 13,89965. And then we've got, is there anything else? Is there anything else? We've got demand zone down here. 2 overlapping fixed range volume profiles with overlapping points of controls projected in forward in time through all of this volume as a likely buy zone, also sandwiching the 123.6 and the 1618. So yes, if we were to collapse, if we were to come down from this high, if this count were correct, I'd put a extremely big bet, and I mean literally, on buying Bitcoin down in this area, right? Because that's the low down here. Now, if that's the case, we have to understand that everything we've come to expect about the 4-year cycle, crypto seasons, length of bull markets, length of bear markets, post-halving price action is all wrong, is all broken, and everything we've come to expect is incorrect. Now, I'm fine with accepting that as an idea. Please provide evidence as to why that's the case. That's all I'm asking. It's all well and good drawing lines on the chart like I've done here and saying that could happen, but please explain why. Okay, but that is the bearish case in detail at the larger time frame. That's what we're going to do if the bearish case is correct. So there's the long-term time frame covered. I think we've covered everything we need to. We're going to come in now and go over the shorter time stuff. Okay, so here we are on the 8-hour chart, looking at everything from the low of November 22 through to the highs of March 24. We're looking at this big old bull flag. You know, I don't know for certain what it is. I believe it is. I'd argue to the average layman who doesn't know Elliott wave or much about technical analysis, oh well, if you simply draw a line and do this, it looks like a big old bull flag, which is a continuation pattern. Right, we complete it and then we move higher. So the bullish count fits. How can we interpret it on the smaller time frame? Let's come in and have a look at the correction. So the way I see it at the moment is the low's either in here with this big bullish move we had in 5th of August. Right, we've put in a low and we've moved higher. And we've put in a 1 into a 2 and now we're going to continue higher. This wave 2 might be completed. It may need to come lower. We don't know that. We'll see in time. If this is not the low on the 5th of August, then we are likely seeking out a lower target, perhaps the 50 to the 61.8% or golden ratio range retracement for another wave 2, which is our target box here, which may put us directly into alignment with the base channel, the logarithmic base channel that we worked with. This is a possibility. So the way I've expressed this is if we're not complete here, then this down here, which is the orange count, is the A wave, then the B wave, and then the C wave to take us lower and sweep the lows again. And this creates essentially multiple zigzags lower. And the way I've subdivided this count is that we have A, B, C into a W. This is a zigzag with a expanding leading diagonal in the A and a impulse in the C. We have an A, B and 5 waves in the C for a flat pattern, A, B, C. This gives us this minuet A of what will be the minute X wave. From there we come down in a zigzag at sub-minuet degree into minuet B. We then move higher in 5 waves into the minuet C of the minute X. This was the impulse that caught me out. This 5 wave move to a high is what confused me, right? And what made me make the error. I saw 5 waves up, and I have a very simple saying: 5 waves up, 3 waves back. If you see 5 up and 3 back, it's a buy. If you see 5 down and 3 back, it's a sell. And 80% of the time, given all of the potential patterns out there, and you can quote me on that, that's accurate. This was one of those 20% occasions where it wasn't. It was the C wave of a flat, and it rolled over to new lows. And it wasn't just a C wave of any flat, it was the C wave of a running flat, which is extremely uncommon. So forgive me for being wrong, you know, but either way I've covered that enough. We're either coming off of the lows and we've done 1 and we've done 2 and we're going higher, or we've got A complete, B complete and C to come lower. Let's come into the smaller time frame even more now and see how we can interpret this move off of the low. So let's remove all of that and confusing stuff and look at the short-term count. Now, there are various ways of looking at this. We'll talk about that now over the shorter term. We can say that this is 1 leading diagonal, 2, 1, 2, 3, 4, 5 into subminuet 3, 4 and 5 to complete minuet 1. We then have a zigzag ABC into subminuet W, ABC into X and ABC into Y, a series of 3 wave zigzags. This completes minuet 2. We then have a wave 1 off of the low and then another wave 2 coming back now at subminuet degree. As I said, this could be complete or it could need to come lower again to find that too. Either way, the invalidation point for the count is down here at 49577 on the shorter term time frame. If that's the case, then the larger orange count of A, B and C will take us through that invalidation point, and this will cancel out this short-term interpretation of the bullish count. I hope that's clear. I'm trying my best. Alternatively, we have a few other things to consider. So we're going to have to zoom back out now, guys, right, and come back to the day time frame. Well, we'll come back to the 8-hour time frame. So I expressed the primary is still 1, 2, 1, 2. 2's either in or it's not. We've spoken about that just now, and we're about to go higher in a 3. Alternatively, as I covered on the larger time frame, there's this count. The idea that we've done 1, we've done 2, we've done 3, we've done 4, or we're soon to finish 4, and then we're going to go lower. Now, if we're still waiting for the wave 4 to come in, our traditional invalidation point for the wave 4 is the top of the wave 1, all the way back here. I don't think we need to wait to see such a thing happen. I think it would be pretty obvious that that was no longer a wave 4. That was extremely unlikely to be the case. But we'll put it in out of discipline. This means that we're about to enter intermediate wave 5, or we're already in intermediate wave 5. The problem I've had with this I expressed earlier, which is this will be over so soon and so fast that it won't hit any of our time targets, and it would result in a primary wave 3 finishing so low in price that I would have serious concerns about whether or not the wave 4 could complete without transgressing the primary wave 1 high. So I think this is a lower probability count, but I will consider it more seriously now that we've seen such a serious pullback. One of the reasons I'll consider it more seriously is because it just so happens to come to rather neat and tidy wave 4 targets. Okay, here's the 23.6, here's the 38.2. We finished smack bang in it. Based on that alone, I will increase the probability of this beyond what I previously said. Right, so I will take this more seriously, but I would just like the caveat of saying that the 5th wave is going to have to do so much work and be so explosively violent to make up so much headway in order for the larger term count to make sense. Okay, but it is possible. My second alternate, I'm going to put that into the alternate 1 here, is that we are actually yet to complete an intermediate wave 1. We have wave 1, 2, 3, 4 at minor degree, exact same as the prior count, but at 1 whole degree lower. This is stupendously bullish, okay, and I don't subscribe to it because it's too bullish even for me, because I don't think there's enough time to complete 1, 2, 3, 4 and 5 in a single year. There isn't enough time left based on my expectations for the cycle, so this is too bullish. The next count we've got is we have just completed wave 1 and we are currently in wave 2. This I'll entertain a little bit more. I haven't fleshed it out admittedly, so what I will say is I'm going to swap these over. I will say the number denotes the probability, and we'll say this is alternate 2 and this is now alternate 3. If 2 is complete, all of the big price move is about to come. Now we're about to go, and yes, it could come lower into the 50 to 61.8 down here. That's why I've got it down here. But then all of the big price moves about to come. We can flesh this out if we see evidence which supports the idea of moving into an intermediate wave 3. Everything will ramp up in severity, right? But for the moment, it's just a rough idea. We're going to move it up there. Right. So we've covered our alternates. We've covered our primary, we've covered our short time frame bullish count. So the bearish count over the shorter term. Now we don't need to worry about the move into the high here. We've got that expressed on the larger time frame. It's just an ABC. We know we can count this as 535 because we've counted it as 1212 or 1234. So we can plug in either one we want to get to the high. It really doesn't matter. Okay? But we have to break it down as A, B, C instead of 1, 2. That's the only difference. So what I'll do is, while I'm here, I'll just add that in. And this would be at intermediate degree, wouldn't it? Yes. Because we're coming down in primary degree. So this would be the primary B up here, and then we would come down in. So let's just turn off that primary long-term count, because that's going to confuse us. So from the high, let's come back down to the hour. The way I think we've got to look at this, if we're being uber bearish, is that we've had 1 as a leading diag, zigzag into 2 at intermediate degree, impulse in 5 down into minor 1. This cannot be an impulse. It was a C wave in our primary count, but it cannot be an impulse in this count. If we're going to go 1, 2, 1, 2, it has to be a zigzag. So all of that is A, that's B, that's C. I don't like it at all, right? But we already know why I don't like it. But either way, that's how I think you'd have to count it. Then we come down in 1 and back up again in 2 at minute degree. Now this could be complete or not. We could come up to here and we could now be going 1, 2, 1, 2, 1, 2 and working our way down to that massive C wave. Okay. This count invalidates. Oh wait a second, we've come higher. We have come higher, so I'm going to have to adjust that. I'm going to have to say 1, 2 is there. 1, 2. Could it be a diag? Maybe. Maybe it's complete, or maybe it's 1, 2, 1, 2 again. I'm going to move that down there out of the way and suggest that it's 1, 2, 1, 2 again, because it really doesn't matter. We've got the same invalidation point. Come back above 62,729, and this 1, 2, 1, 2 stepping down motion is incorrect. Okay. What it would be instead is the orange count. We've gone A, B, and now we're going to go C for a deeper correction at minute degree. Here's the 2. If this is the case, we will not come back above 70.016. We'll come back in 3 waves, and then we'll head down from here. If for any reason this bearish count progresses beyond 70.016, then all of the bearish count is incorrect. Okay, and you'd have to come back and have another rethink about how to express it. If we come back to new all-time highs, let's just put in the ultimate invalidation, major pivot back here. If we come back above all-time highs, any bearish count from the high is wrong. Alright. And then at that point, I think things will really start to cuck. Because if, once the bears go quiet and start feeling very sheepish, that's normally when the bulls start to run. And that could take a fair old while, and it would be strong confirmation of the bullish count proceeding as expected. So let's just throw these few extra details into the bearish count. And then we will do our best to sum up. So let's come... How do we want to do this? Out to the 4 hour. We'll sum up the smaller term counts. And I'll try and be as brief as possible. Right. So the primary count is 1, 2 at intermediate degree, 1, 2 at minor degree. Is complete or close to being complete. We've either gone 1 into 2 done, or we've gone down in an A, up in a B, and will now come down in a C, which is the orange count, to complete the Y over here rather than over here, and this would complete the minor wave too. So we could come lower and sweep the lows. For the moment, given the bullish candle I've seen on the weekly time frame, the volume to support it, and the shift in momentum back to being positive, I'm going to say the lows in. For the meantime, it's more probable. I'm not saying it's in for certain, it's just more probable. 1, 2 done, we should now be moving higher to new all-time highs, heading back towards all of this prior resistance. Alternate 1, the most likely alternative, is 1, 2, 3, 4. 4 is already in, or 4 will sweep lower again, just like the 1 could, all at intermediate degree. Invalidation for this is all the way down at 31,035. I'm just going to correct that figure. Like so. And save. And then we got alternate 2, which is the idea that we've already completed 5 waves up into intermediate 1, and we've got deeper to come in intermediate 2, and then we'll have a massive intermediate 3. The reason this is less probable than the prior count is it's the length of the 3 compared to the 1 and the 5 is so unusual in length and aggression and subdivision for it to be a wave 3, and I find that very unlikely, so that's why it's down here. Alternate 3, this is the least likely, which is we haven't even completed 1 intermediate wave degree within this new cycle yet. Does not appear to be enough time to complete. Finally, the bearish count is on the longer term. Let's express it in the BLX again as a reminder. We've completed A down into the lows of 22. We've completed B into the highs of April 24. Then we see all the move down into the C. Right, now this will take us to new lows, so ignore where I put these numbers, they're just there, so as it happens I placed them. So we have 1, 2, 1, 2, 1, 2, 1, 2, 1, 2 down, 3, 4, 3, 4, 3, 4, 3, 4, 5 to find the C, and this will bring us below the pricing of November 22, excuse me, where I showed you all of those various targets at those lows. And that is the summing up. I am bullish, things look good, the recent low looks good, and long term everything is still tracking exactly as expected. Regardless of my last count being invalidated, we have a whole bunch of other ones to entertain you with now. So that's going to keep you guys fed at least for a while, I hope. If you have any questions or comments, please feel free to share them in the description box below, in the comment section below. And if you're new to the channel, please feel free to subscribe and smash the like. And if you're interested in learning about Elliott Wave or seeing any of my education videos and getting access to weekly live streams plus the Discord plus a bunch of other video updates each week, please feel free to join me on the Patreon. The link is also in the description box below. Take care of yourselves, guys, and I'll be back with you as soon as I find time to be. All the best. Bye bye.